Hi everyone, and welcome to Chart Strength. Today's episode we're going to be doing our trading journal for March 10th and taking a look at a few different parts of the market. Today and yesterday was a super interesting day because there was a lot going on, which I will talk about. And also, please, can you hit the subscribe button? That would be great. I want to get this channel going, get a community going where we can talk about different things about the market and different ideas so we can all excel and do well. So that would be highly appreciated. Hit the subscribe. So let's move right into the different charts we're going to take a look at. I think we're going to view the VIX, the US dollar, breadth, and different markets, the Dow, the S&P, and the NASDAQ. So let's dive right in and see what is going on today. Okay. I'm sure y'all probably have heard about the Silicon Valley Bank in the West Coast. It is in duress. It had two really bad down days, including today and yesterday. There appears to be a little bit of a bank run or a risk of a bank run. The CEO kind of give bad messaging, it looks like, on what is going on with the company, and so people are pulling their dollars, and that had a major effect on other financials and the broader market as well because of costs of interest. Okay, DocuSign is also down a lot. That was a pandemic darling. And Oracle, another major software company, is down too. So a lot of pressure in the market. You can see here on the daily look at finviz.com that we've had a major washout here, and it's broken a lot of trends, which we'll take a look at. So let's dive right in. Okay, let's go to the Dow trend lines. This is something that I've been looking at, which is the Dow prognostic tool designed by, or first discovered by Hooper, which basically says that if in the first quarter of the new year, if prices break below the December low, which was right over here, then that is a warning signal that we have further weakness to go. So that's what we've seen here, is a break of the December low, and that is not a good sign. This chart looks, if you can ignore my lines, this looks pretty ugly actually, like not good at all. Major washout. But I'll take your attention to our favorite sort of setup in the MACD histogram is lower lows. So price is making a lower low, but the histogram is not yet. So part of me feels like this is a good buying opportunity. We're quite extended. There hasn't been a significant change other than maybe sentiment. Sentiment is huge. Sentiment can drive a lot of things, a lot of price action, but the pressure isn't that strong from a MACD histogram perspective. So we'll continue to monitor it. The MACD histogram can continue to break below. So we're going to draw this trend line out further and see where things go. All right. This is the prognostic tool, and we violated that here. 32,573 was the low in December, and we have on a weekly basis significantly broken that. So we need to monitor the market. You need to tighten up your stops so that you don't face the wrath of the market. From a monthly basis, this is a good long-term look. Not looking good either. It's not looking good either. We could probably get down to the October level because that is the long-term trend. But those are really big key points in the market. The histogram, the MACD, is not looking very good either. Although it is above zero, it's trending downwards. And here we're below the 20-month moving average. Also very bearish look. And the best 6 months, this is sort of our predictive tool, which we shouldn't be doing, but given the presidential cycle, that's why I've highlighted it, just so for my records to see how things will go. All the purple lines are my comments and predictions. Again, don't have predictions, let price guide you. So what we see from the balance point of view is it is improving, but it still hasn't gotten above its trend. And the new highs and lows relative to the market is new. There aren't new lower lows, but we're below the zero line, and that is concerning. What we want to see is a trend. So we'll let it come down, but we want to see it to continue gyrating up. Okay, what else can we look at? Let's take a look at the NASDAQ. Here is the NASDAQ. We've got the 40-day moving average in blue, which is our medium-term trend line, and that has been violated. But again, we can see the histogram is not making a new lower low. So I think this is sort of just more sentiment driven and not real fundamental pressure in the markets. From a momentum point of view, the momentum is favoring the downside. You can see that in the ADX, the switch over here. And momentum has really gone to the wayside. So maybe we're just going to move side to side here until April, which April is one of the strongest months in the best 6. So we'll see. Maybe this weakness in March is to be bought. I find myself keep saying that any weakness in February and March should be bought. We need to be proven right in April, because after April you come across May, which is a very weak month in the markets and typically starts to precede a sort of the summer doldrums. You don't get a lot of activity, not a lot of volume in the July-August months. So we'll continue to monitor that. This is another long-term chart to take a look at. You can see right here that the 40-month moving average has been a significant area of support, but prices are below the moving average, so caution is required here. We need to continue to monitor it and place some stops. I still think it's important to have exposure because we don't know which way the market's going to go. We don't know where price is going to go. At the end of the day, we only just need to respect price. So if things do improve, if sentiment sort of improves a little bit, I think there is a ton of upside. This is a trade that I've put on. I'd like to share it with you guys. It is a trade on Google. We bought around 94. We are obviously down now, and there's a chance I could get stopped out around 89 here. I think I placed it just around the last low, but the MACD histogram is positive, so if this continues to stay positive, it should be good for price, so let's continue to watch that. Okay, one of my favorite charts is the S&P Daily. I've really marked it up using the Justin Mammey sentiment cycle because there's different parts to the market. This was our October trend, which is being highlighted a lot on Twitter right now, but we've broken that. We've broken multiple levels of support, and that's not very good. This area, we call it the wall of worry. It's a hard part to overcome, but this is what the market needs to cover up probably past 4,300 to really change the sentiment for the better. MACD histogram is making a new low in the last few days, but it hasn't surpassed this one. So I think this could be a washout attempt to break, a failure on weakness and movement up. So what's that saying? There's a saying, when the time comes to buy, you won't. And that's because there's so much selling pressure, you automatically or start to feel like there's more downside. And it doesn't feel good to be buying stocks when they're lower. And I understand that sentiment because the fundamentals aren't really there either, and prices are falling down. It's kind of like makes it a hard decision to dive right in. But there seems to be some significant strength since October. And I think this is really just effects of jawboning. Maybe it's setting the market up for higher rates. And when the higher rates do come, we've sort of already digested it, already discounted that. And that could lead to some gains. So, as I speak, I think I probably want to start to add some exposure here. But we'll see. They say you shouldn't buy into on a Friday. So we'll wait. We'll take a look on Monday, see where things are. The best 6 months. So February was supposed to be the weakest month, but it looks like right now that March is turning out to be one of the weaker months. I'm going to try this tool and mark it up. You can see this is March, and we've had a major drop down. April, this month here, should perform better and continue the trend upwards. Anyways, let's see. That's how do we get rid of this stuff? Take the pencil away. Okay, there you go. Yeah, we just got a few more minutes. We wanted to look at the VIX, so let's take a look at the VIX. Well, we got the dollar. We'll take a look here. You can see from the past here, from 2022 till basically in October, that the US dollar was rising a lot and prices were coming down. The dollar peaked up here in October, slowly making its way down, and you can see there was some firmness in prices. We've had a rising dollar since February. That might be one of the key factors putting a sort of tepidness in the market. The other one that we want to look at is the VIX. This one, I think I highlighted in the last video too. You can see a major spike in the VIX. This is not good. This should beget more selling. Yeah, it's following its trend. You can see with this spike, the prices have fallen in the market, and that pattern reoccurs. A spike in the VIX leads to a decrease in stock prices. And the other thing we wanted to look at was yields, if we can find that. We'll probably just search it up here. TNX, this is a 10-year yield. It was trending up, but now it's broken. And this might be good for the markets. I don't know. Lower yields, the market wants lower yields, interest rates, and this might be exactly what the market needed. But who knows? And the other thing we wanted to look at was breadth. Where's my favorite breadth tool lately? It's the US highs and lows, 5-day total. And it is right about here. It's in a positive area. I would argue that this is a good place to hover around, and probably a normal place to hover around as the market sort of shifts from growth to value to growth, whatever works for the market. And I think we have time for another one. Let's take a look at advancing and declining issues. We've come back down. We want to hold up here, but this is again not a good sign. A lot of our big stocks are below their 40-week moving average, and that's not that good. The only one that's showing some strength is Google and Exxon. But everything else, Costco and even the New York Stock Exchange, is below its 40-day moving average and trending lower. So we'll see how that goes. Okay, so that brings me to the end. Hopefully you found that informative look into the markets. Yeah, keep coming to the channel, subscribing, and liking these videos. It definitely is encouraging, and I look forward to continue to share my trading journey. Thanks for watching, and we'll see you on the next one.